Hey everyone, welcome back to the channel. It's that time of the month that again we look at our public portfolio and see how it's performing. So in today's episode, we'll start off with our portfolio breakdown. We'll look at all the stocks and the ETFs, their current price and how is it performing and how is it trending. Then I will also share with you at the end which new stock I am adding in the portfolio. Now, this is a growth portfolio, so this is also going to be a growth stock. So if you find any value out of today's episode, leave that like, and without further ado, let's dive in. Let's do a deep dive in our portfolio breakdown and see which stocks do we have. So currently, AMD is about 27% of our portfolio. Next biggest chunk is Pinterest with 13.8%. We have SOFI at 11.2%, VALE at 10.8%. So these are all above 10% in the portfolio. The next two big ones are the ChargePoint at 7.1% and Hood also at 7.1%. Ford has come down recently from its high, so it has dropped in the portfolio to about 6.6%. Next up is XLE and XLF ETF, which are at 7.1 and 6.3. And the lowest one right now is GGPI, where we have not added a lot of stocks in the portfolio. So for the month of January, we lost about 15.73% in the portfolio. And the only winners in the portfolio for the month of January was VALE, which gained about $13.92, and XLE, which only gained $5.06. Rest all the stocks for the month of January had major losses, and AMD we lost $118, Pinterest we lost $67, close to 68, SOFI we lost $56, ChargePoint we lost $52. In February, things have started to change because a lot of these companies, especially companies like AMD, they reported earnings and the earnings came out to be pretty good. And this is why our portfolio for the month in February so far, the time of this recording is 9th February after hours. So our portfolio is up 3.66%. We'll see how the month performs and I will give you an update next month. But so far we have covered $74 in AMD. We have covered $28 in VALE, and VALE has been having a lot of updates recently. So if you have not seen my latest video where we made over 119% on the VALE call, check it out right over here. We gained a lot in XLE. XLE is a good choice to be in. I have done two videos on energy ETFs. One is XLE and one is VDE. XLF also we gained about 5.97. Considering this is an ETF in the financial sectors, this is where you should be investing if you want to take advantage of the interest rate hikes throughout this year, because the banks and the financial institutions are set to do good. We also gained about $5.44 in SOFI, and we also gained a little bit in GGPI. Rest of the remaining companies, we lost 10 cents in ChargePoint, we lost $4.20 in Hood, we lost $14.70 in Ford, because Ford was trading at about $23, $24, almost the high, and now Ford has come down. And Pinterest, unfortunately, it's been a disaster for Pinterest for a while now. They came out with their earnings. It wasn't a stellar earning, but it wasn't as bad as others were expecting it. Facebook was the one who drove the market down. Your portfolio will not always remain green. There will always be winners and there will always be losers. With individual stocks, it requires a little bit more patience. It requires a little bit more finding the right stock for the portfolio and being on the upcycle of that company. So let's start off with a quick technical analysis on the stocks that we have and see if there is any opportunity to buy and what is the chart telling us. Let's start off with AMD and see how the chart is performing and see if there are any opportunities to buy at this point in time. Well, most recently, AMD was like a falling knife, as you can see right here, and the stock went all the way down to $98.82 in one of the trading sessions, and this was below its 300-day moving average. And these are the times when you actually should be adding money in your portfolio. We unfortunately could not add because we ran out of money for the portfolio, and this is what I'm going to change starting this month. Right now, the stock has slowly climbed up to all the way to about $130.76. It's still well below its highs of $164. However, I am a little cautious before adding more AMD right now. I'm looking for a slow pullback considering the market is still very volatile. There is no clear direction of whether the market is going to go up or is going to go down or is going to trade sideways. It's very difficult to predict right now. So I'm trying not to add a lot into AMD or any other stock for that matter. If you are looking to buy AMD, a good point for entry would be anywhere between $115 and $126. That is the gap that I would be looking to add more AMD into the portfolio. Next up is Pinterest. Looking at the chart right now, I can tell you for a fact Pinterest has definitely seen better days. Right now, the stock is still trying to find that support level. We thought we found some support around the 40, 49, 48 mark, but even then it just could not sustain that and has been steadily climbing down. We then thought it would find support at the 33.84 level. Still, it missed that, and now again it's down to about 23. We do see some green bars over here, but again, this is very difficult to say that this is a good entry point. Of course, you can never find a bottom. Right now, the stock is in the 20 range. This is when it was trading back in 2020, and since then we had this massive bull run on this one. In the public portfolio, we are putting a halt on this stock. We are not going to add anything more until we see that it has found a support. It has tested that support, made sure that it's a solid support and has a bounce of that. That's only when we will look into start adding more into the Pinterest. Next up is SOFI, which is one of the most popular retail investing stocks. SOFI is trading at around $12.61. That is the last price at the time of this recording. SOFI, similar to the other growth stocks, it is also trying to find a support level, and we have really not seen any support level. The lowest it has dipped to about 10.50. We are not adding any SOFI currently in the portfolio because we want to see that SOFI forms a support, gets a bounce from there, and that's when we will start looking to add more. Next up is VALE SA, which is one of our mining company picks, and we actually were able to get a very good bounce off the 1521 level, and now it is slowly creeping up to the next resistance of 1732, and this is going to be really the make and break for VALE as a stock. If it can break this resistance and make sure that it forms 1732 as our next support line, we can possibly see the highs of 22 and 23 again for this stock. Now, if that happens, then our VALE call would be in a good position, as well as there are some good catalysts that have really come out recently for VALE. We are also hearing news about improvements in the Chinese economy, which will also help VALE in the increased demand for the iron ore as well as the nickel and other minerals. Next up is ChargePoint, and unfortunately ChargePoint stock also looks very similar to all the other growth stocks, and this year just has been like that. Most of the growth stocks have been hammered to a point where we are still trying to find a support level. Unfortunately, it's also down with all its moving averages, still trying to find that support. The lowest it went down was 1121 in one of the recent trading days, and we just have a lot more red bars as opposed to the green bars, which means that there's more selling pressure than the buying pressure. So until we see some kind of a support over here in the 13-14 range, and the stock can bounce off from there, it would be very dangerous to even add more. Any of these stocks that we talk about in this video, unless you see that the stock has formed a support level, that's when you should add more to your portfolio and not before that. Whether they are in the news for some good reasons or bad reasons, Robinhood is always an interesting topic, and it always brings investors to talk about Robinhood. We are seeing a similar trend in Robinhood. It touched the lowest of 994, which was most recently a couple days ago, and we are still trying to find a support level over here for Robinhood as well. This is very similar to, again, all the previous stocks we have discussed. So adding more to your portfolio, if you're starting a new position, then it might be a good option to buy and start a position, a very small position. But if you already have bought Robinhood at higher prices, there should be some deliberation before you think about adding. Well, next up is Ford Motors Company. Most recently, it hit at high of $25.87. That's when our portfolio was green, and it was the only saving grace in the portfolio since all the other stocks were dragging it down. Right now, since the highs, the stock has been selling off lately. We are getting very close to the 200-day moving average of 1675. I would like the stock to actually touch 1675, and that's when I will add more to the portfolio so that we don't increase our cost basis on this stock. Whether we'll have that or not, I don't know. Nobody can predict that, but that is where I look to add more Ford in the portfolio, because in the long term, I am still bullish on this company, because this company is taking the necessary steps that is required to be a player or a relevant player in the new electric vehicle age. The last stock on the portfolio is GGPI, and then we will touch on the ETF itself. GGPI hit an all-time high of 1641 when the stock came out, but since then it has been trying to find a support between the $10 and $11 mark. We still don't have a good support level for them. It has been bouncing off this level of 1025 for a while now, couple times, but we'll see how that performs moving forward. We are still very bullish on GGPI, just like we are bullish on Ford, just like we are bullish on Tesla. All these companies, regardless of whether you think Tesla is going to be the leader or not, or whether you think GGPI will catch up or Lucid will catch up, end of the day, we are all moving forward towards the electric vehicle and making a better world out there. Reducing carbon emission, that is the goal. So I am totally in favor on all these companies that are looking forward towards the green revolution, and GGPI, in my personal opinion, definitely has a much more potential than a lot of other traditional car manufacturers, because they are already selling a lot more cars than your Lucids and the Rivians of the world. Now at this point of time, I'm still not adding any more GGPI until I see a solid support between the $10 and $11 mark, and then we see a bounce. The bounce can only happen when the general market improves. Until we have this uncertainty in the general market, the chances of having that real bounce and not a fake bounce is something to be looked at. Well, next up is XLF, which is a financial sector ETF. If you have not seen my analysis on XLF, it's right over here. And right now, XLF has, most recently, XLF went below its 200-day moving average. That was around the third week of January. Since then, the stock has been slowly climbing up, and now it's back up to the $41 mark. We also touched the 41.70 was the recent high for the stock. So for the long term, I really do not mind adding more XLF in our portfolio, but I'm still holding off to see some kind of a pullback, considering we have had a lot of green candles here. And generally when you see so many green candles at one point of time, you do expect that the stock will overheat, because the RSI is going towards the 70 mark. Once the pullback happens, at the 100-day moving average, it will be about $39 or so. Last up is XLE. Now, XLE is an energy sector ETF, which is from the State Street Corporation. Another option for you to buy an energy sector ETF is VDE. It's a Vanguard version of energy sector ETF. The link is right here. Check it out. If you look at the chart for this stock, man, this has been running crazy. There has been a solid momentum going up, and that is because the oil prices are going up. So it's very much correlated with the oil prices, because as I mentioned in all my videos for the ETF reviews, Chevron and ExxonMobil form the majority of the portfolio in this ETF. So they drive the price. If the stock of Exxon and Chevron are up, it will drive the price up as well. So at this point of time, we are holding off from buying more XLE, because we do have a small exposure in XLE, but I would not want to overexpose myself to this sector ETF. I would use that investment to buy more good quality companies. So what are we buying for the month of February? Well, for the month of February, we have about $200 in our portfolio that we need to allocate. Now, what I'm going to do this month though, which last month we learned a lesson because we ran out of cash for the month, and there were some good opportunities that came around the third week of January, but I did not have any cash left. So this month, I'm only going to be using about 30% of the cash that we have towards buying the stock, and I'm going to keep 70% of the cash so that I'm cash heavy on the portfolio in case we have some dips in the coming weeks or so. And if we don't have any dips, I'll just keep that cash in the portfolio, and when the next month we add $200 more, we'll just have a little bit more cash to invest in March. But for the month of February, we are looking to add Velodyne Lidar into our portfolio. The ticker symbol is VLDR. I will do a full analysis on VLDR, on why we are adding VLDR to the portfolio, but just to share with you some quick facts, one of the main reasons that really interested me in looking into VLDR is, first of all, Velodyne Lidar surges after Amazon packed with sensor maker. And one of the reasons, when I looked into this company further, Lidar provides smart, powerful Lidar solutions for autonomous vehicle, driver assistance, delivery solutions, robotics, navigation, and so on. These are some of the products that they have. They have Lidar hardware and they also have Lidar software. So it's a both hardware and a software company. The stock has been beaten down. It's down to $4.10 and it was trading at $23.22 1 year ago. So is it a good time to buy this stock? Well, for that, you will have to wait for the next video, but we'll be adding VLDR into the public portfolio with only about 30% of the allocated funds for this month. So which of these stocks do you have in your portfolio, and are you bullish or bearish in any of these stocks? Let me know in the comment section below. If you enjoyed today's video, don't forget to hit the like, click on subscribe and ring the bell notification so that you do not miss the future videos that come out. I will see you next time, investor family, but don't forget to invest for tomorrow.